Okay, Steve Kaplan, QuickBooks Video 6, Setting Up Inventory, a slightly different approach. How I did it was I made a separate sales income account and I made a separate cost of goods sold account for each different product. This way I could track the gross profit by individual product. Notice in the chart of accounts, I made rock sales as an income account and scissor sales as an income account. And I put my own cost of goods sold account named cost of rock sold and another one named cost of scissor sold. And the type is cost of goods sold. Now when you open the list, the item list, and you're going to make a new item. Oy. Stupid pop-ups. You're going to make a new item. The new item will be inventory part. Now, we're going to call it rocks. And the cost, the purchase cost will be 10. And the sales price will be 50. But the cost of goods sold account will not be the one. Notice, the cost of goods sold account is not going to be the one that the computer created. It has to be the one that you made to track the cost of that particular product. And the income account will be obviously rock sales. So the money that the customer gives you goes in, or you earn from the customer goes in here. What you paid for the rock you gave the customer goes there. Hit next. The next one is scissors. Okay, let's make that 20. We buy it for 20. We sell it for 100. But that cost would be tracked in cost of scissors sold, and it would be scissor sales. So the money the customer gives you for scissors goes in here. The money the customer, what you paid for the scissor that you gave the customer goes in there. We can put them all together in one inventory asset account, but if you wanted, you could have a separate inventory asset account for. Now, we're going to quickly observe how each of the 4 different inventory transactions are recorded. Buying where you pay immediately, buying where you pay later, selling where the customer pays immediately, and selling where the customer pays later. And after each transaction, you will see the logical result in our good friend, the trial balance. November 6th, paid Jane immediately for 40 rocks. That's banking, write a check. So we come over here and we click banking, write a check. Okay, the date was November something. The date was November 6th. November 6th. It was the only vendor on the list, Jane. Oops, he's a customer, she's a vendor. Do not fill in the money amount if you are buying merchandise. If you were paying an expense, you would fill in the money amount here and you would choose the expense account here, but do not. We're buying an item. So we click the items tab, choose rocks, and the quantity was, by the way, don't click in this box. This just tells you how many, this box will tell you how many is on back order and so on. And I don't even know if the Mac version comes with that. But click next to quantity right here. And how many does it say that we bought? We bought 40. So we fill in the quantity 40. Remember, pushing the tab key makes it multiply across. That means we bought $400 worth of inventory, and our bank account should go down by $400. Save and close. Take a look at the results in our report that is the trial balance. Okay, maybe we'll make it look nice and big. Okay, maybe 18 is good. And as you can see, inventory is now 400, where before it was 0, and cash went down. Notice there is no account payable right now, but as soon as we buy more inventory asset with a bill that we promise to pay later, we will have more inventory and account payable will appear on the trial balance. Let's take a look at the transaction. It says November 7th we received bill number 8472 from Jane for 55 scissors. Okay, vendor enter bill. And we all know this is a very easy form to fill out. Okay? We have Jane is the vendor. Okay? The date was the 7th. The reference number was 8472. Do not fill in the amount if this is a bill for items, not expenses. Do not fill in the amount. Okay? All we do is we choose scissors. And what was the quantity? The quantity was 55. So all we have to do is put the quantity here, push tab. The computer says we now have $1,100 worth of scissors in our inventory, and we now owe Jane $1,100. Let's look at the results like magic. Save and close. Aha! Account payable showed up for the first time as $1,100, and our inventory asset increased by $1,100 because it was $400 before this transaction, and it is now $1,500. Now here's where things get interesting. At the moment we sell the rocks, rock sales will show up in the amount that the customer gives us, and cost of rocks sold will show up in the amount that we paid for the rocks that we gave. The transaction states that on November 8th we sold 12 rocks to Joe, cash today. If it's cash today, that means the customer should be given a sale receipt. Let's take a look at this nice looking sale receipt that they provide for us. Okay, November 8th, customer Joe, rocks 55. Now notice what the customer, what the customer is supposed to give us or owes us or pays us what we earned is $27.50. But we actually had to give a certain amount of rocks that we paid for, meaning a certain amount of asset value we had to give as the cost of rocks sold. Look what happens in the trial balance when I click Save and Close. Aha! Rock sales showed up for the first time in the amount that we earned, and cost of rocks sold showed up to show us the amount that we paid for the rocks that we gave Joe when he gave us the $27.50. So if you wanted the profit from that one particular sale, you would have to subtract rock sales minus cost of rocks sold for that particular sale to get that profit. And every time we sell rocks, these... Now let's do the last one. There's rock sales and cost of rocks sold. Now we're going to sell scissors. And you'll see scissor sales and cost of scissors sold. Okay, November 9th, sold 13 scissors on account to Joe. On account means we make an invoice. So, customers create invoice. There's a nice looking invoice here. We sold it to Joe. We sold it on the 9th. It was scissors. And the quantity, I believe, was 13. 13. So the quantity we put 13, and remember, after you type in a field, always push the tab key to multiply across. Now the customer's giving us, or will give us in the future, $1,300. But to know the profit, we have to subtract out the cost of scissors sold, what we paid. Save and close. And now notice cost of scissors sold is $260, scissor sales is $1,300, and every time we sell scissors, scissor sales goes up and cost of scissors sold goes up, and we have to subtract the two to know the profit from scissor sales.